Good afternoon. This is Rick Ackerman, editor and publisher of Rick's Picks. And just wanted to update. We've had an interesting day. All the big news is out. Everyone was expecting a 25 basis point rate cut. It happened and the market tanked on the news. Definitely a case of buy the rumor and sell the news. I think we may be getting into a time when a different strategy than we've used for the last 10 years might be worth trying. I put out a target just a little bit ago. This was a couple weeks ago in the E-mini S&Ps, and you can see that in an update, the target was 3028.75 on the E-mini S&Ps. And that actually went out as an update on the 23rd of July. And if you look at the chart, you can see that we had the actual top up there within less than a point of where I'd forecast. The top was 3029.50. So I missed by 3 ticks. We've come down pretty hard, but the important thing is that the market seems to have stalled the S&P 500 in a place that's logical. So we needed to pay attention there. Rick's Pick subscribers took advantage of that possible top. And when we're looking at a 10-year bull market, we're never going to be completely certain that we're getting the mother of all tops. But certainly if we get a logical place to get short, we had it. In this case, I had suggested buying puts in DIA, and we went for the these were pretty far out of the money. The diamonds were trading up at a high there when the E-mini S&Ps were topping. The diamonds were at a high of about 274. So when I looked at the put options in DIA, let me get them up for you. The first place I could find real cheapies, meaning down around 50 cents, that's where I like to buy them. I went out to I wanted at least 6 weeks or so, and we went out to the July 23rd expiration, and down around let's see, well, down around you can see here, right now today we're seeing 50-cent options at the 26 strike. These are puts. So DIA, actually let me change the symbol here because we may be getting a little static. We went down to the 255 strike. Let me show it to you. And a graph of the options. You can see in a moment where they've actually traded. These are the 255 puts, and they've traded back in early July, the 5th, as high as $1.80. At the time I was trying to buy them, shorting the potential top there in the E-minis and the DIA. They were in the 50-cent range around here, and I had suggested to my subscribers to buy them at prices between 35 and 50 cents. So they did trade as low as you can see on this one bar a couple days ago. They traded down to 42 cents. And as is my practice all the time, when you see an option price double, we want to take off half of the position at twice the price, which means any options that we retain, the remaining half of the position, will be free. So that's what happened here. The options went from 42 cents today. You still could have bought them in the morning for as cheap as 44 cents, and they went to they traded as high as 86 cents today. So when you get that kind of move, you definitely want to take off at least half of your options position, and that way you can continue to hold the remainder for as long as you want, no problem. So what I'm going to suggest is for you to do the same thing. We always want to be buying these puts. We want to, at this point, go out maybe at least 5, 6, 7 weeks, buy the weekly call options, and we want to be buying these puts when DIA is strong. Obviously, we're not going to feel much like buying it when the trade seems to be going against us, but that's really the best place for any trade to begin, is not in the comfort zone, but in a place where we think, uh-oh, what am I doing here? So you want to be buying out of the money puts, 50 cents or less, whatever strike you need to go to, however far out of the money you need to go to get the puts down to my comfort zone is really in that 50-cent range. So so when the diamonds are rallying, you want to be buying puts down near those lows. Never buy puts on strength, especially in a bull market that's been going for 10 years. And I'm not saying this is going to be the mother of all tops that we've just seen recently. You can see it here, but it stood to be a potentially important top, and that's why it behooves us to speculate, especially if we do it in the way that I just suggested, catching a top, getting a nice downdraft so that we can double out on half the options and keep the remaining half essentially risk-free. So I also mentioned that I would show you a little something in gold, which is part of this possible sea change that we're seeing right now in the markets. Gold has been particularly strong since early June, and it's been a lot of years since we've seen sustained strength in gold. One thing I've noticed is that in attempting a cheap play in gold, I've been using GDX calls, and I've got a couple subscribers that are in these things up to their eyeballs. As much as I wanted to buy them, I didn't get too much weakness here. It's been up, 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 up. And that's how bull markets begin. They start sort of edging up, and you think, boy, this thing has been in a wallow for so long. I don't want to chase this thing and have it smack me in the face the next day. So what's happened is each day you come in with that idea that you're going to wait for weakness, it just gets further and further away from you. So we're finally, I've had the discipline, and I hope that you have it too, to stay out of this thing when it's just going up. Even if you miss the trade, it's better to miss it than to jump in just willy-nilly on some instinctual notion that it's just going to go higher. In this case, I'm not going to get into the proprietary details of the mechanical trade, but I will mention that if GDX were to come down to that green line, 2602, that would set up a pretty nice opportunity. If you want to find out more about these opportunities, I call that a mechanical trade, then I would strongly suggest that you come to my website, rickackerman.com, and at the top of the page there, you can take a free 2-week trial subscription by simply leaving your name and email address. You don't have to give us a credit card number or anything like that. No obligation, but you get 2 weeks risk-free, and it will give you access to the Rick's Picks trading room. This goes 24/7. It's a great bunch of traders from around the world. On the trial subscription, you will be a spectator. You won't be able to post in the trading room, but you can go in the coffee house, which is a less formal discussion, and hang out there and be part of the give and take. So again, rickackerman.com to sign up for a free 2-week trial. And hope you came away from today's presentation with some useful things and that you can make some money with it. Be sure to let me know in the chat room if you've done so. And I will be talking to you again sometime soon, but until then, you all have a pleasant, good day.